Chandan Taparia also joins us on the show. We'll discuss the technicals with him. And a lot of stocks which are buzzing around right now. You have IIFL Finance, which is close to the highest point of the trading session, 8% gain there. Earlier in the day, 361 was doing quite well. In fact, that stock had managed to gain over 20% in this week itself. You also have Amber Enterprises, Praj Industries, some of these big buzzes in the trading session. Just wanted to begin the conversation, Chandan, by highlighting a couple of these names: IIFL Finance, Praj, Amber. Would you be a buyer in any of these names?
Yeah, thanks for having me. So first I'll talk about the Praj. Technically, it has given a breakout from its pole and flag pattern after the consolidative move of last 9 days. We have seen a surge in the trading volume, and today I think volume is more than 40 lakhs, which clearly indicates that this breakout could lead the next leg of rally. So major trend is positive, and the recent consolidation breakout and could add the more flavor. So I believe one can buy with support of say 110, expecting this rally to extend towards 770 kind of level in Praj. Talking about Amber, yes, we have seen a consolidation breakout. Major trend is positive. Momentum is clearly visible. So it has been making higher tops, higher bottom. So one can buy with support of 4400. We are expecting an upside move towards 4700 zone. So Praj Industry and Amber both are looking good. One can go for buying for BTST and positional both.
Right, okay, that's the take coming in on Praj Industries right now in trade. Mayuresh, hi, welcome on board. How's it that you're navigating through the market right now? Doing nothing or adding positions in the under-owned names?
Afternoon, Aisha. No, I think this is a market that you should be a part and parcel of. You can't avoid the momentum that the market is probably giving you. But yes, we are being a little bit more selective. So I think the pockets that we are probably looking at in terms of growth vectors would obviously be something to relate to the budget as well. And therefore, I think the budgetary announcements related to infra spend, manufacturing, defense, I think these are going to be the key sectoral and structural themes going forward. Having said that, a few of the sub-themes in terms of water and waste management, power ancillaries, they're also going to remain in focus. So I think domestic cyclicals are going to remain in focus with expectations of monsoons, which have started off. Consumption should also start picking up steam as we head into the second half of this financial year, and specifically rural consumption. And therefore, consumption, discretionary and durables both should probably have some element of uptake. So I think we remain optimistic on the market. Select domestic focused sectors is where our belief is that the earnings story and earnings growth should still continue remaining strong.
Coming in, a bit of a tumble for the markets right now actually. Let's pull up the intraday chart as to how it's really panning out, because the week has been rather good for the bulls, but now we are giving up some gains. So maybe just ahead of the weekend, there's a bit of a cool off. Just wanted to run you through some of the highlights coming in from the Maharashtra budget as well. Quite a bit of push when it comes to the solar side of things. So 15,000 crore solar power project will be awarded as well. There's a push coming in for solar pumps as well. There's going to be a push for plantation of bamboo. The value that is given to some of the women is also going to be increased in terms of the DBT transfers. Health insurance cover has increased from 1,50,000 crore to 1,50,000 rupees per family to 5 lakh per family, and overall ambit of hospitals etc. has also been improved and increased. So some of these general insurance companies, health insurance companies will be in focus on account of that. Some of the solar pumps makers, the likes of Tata Power etc. are going to be in focus on account of the renewable bit. So a lot of important headlines from there as well. But in terms of the stock prices right now, it is more of the same, at least from the broader markets. So Sundaram Finance is perking up. Tube Investment is something which is in the green right now. But in the red is Kaplan Point. That's taken a knock. Camden Homes is also coming under pressure. But coming back to the big boy Reliance, Naresh, what's the view on that one? That one was cruising with a gain of almost 3% quite nicely. It's given up its gain, now 2.5% higher, but still above 3,100. What's the next level to watch out for on Reliance Industries?
So if you look at it, last range for the stock was around 2,800 on the downside, 3,020 on the upside. So on the breakout, a minimum target upside would be 220 to 50 points. So that gives us a target price of 30 to 50 odd levels. So that would be the target for the near term, and 3,050 now becomes a buying zone. So any dips back to 3,050, 3,080 would be a buying zone, and would have a stop loss below 3,000 and expect a move towards 3,250, 3,300 and then maybe higher. So the trend has started, breakout is good. So remains a buy on dips from here on.
Okay, what's dragging in trade other than, of course, Bharti, which has given up all of its morning gains post that tariff hike and then, of course, that block deal as well, which followed. But some of the private banking names, ICICI Bank is down 1.25%, Axis is down 1.25%, Kotak down 0.6%, and even HDFC Bank is seeing a decline of about almost 0.5% or so. Chandan, would you be a buyer on every dip in the private banking space?
So, we have seen a small profit booking decline in the Nifty Bank in last 2 days, but major trends remain intact. This momentum was driven by three key banks, including SDFC Bank, Axis, and ICICI Bank. So I believe that a small decline could be bought because even after some correction, major trend could remain intact and will continue to be with buy on decline. So if I talk about SDFC Bank, here one can buy on a small decline with support of 1630. Overall, it can head towards 1740 level. I can also look at the other name, including ICICI Bank, where major trend is positive. Some profit booking decline is seen, which could be bought. 1170 is the major support. So if it declines by further few points, then with support of 1171 can accumulate for an upside move towards 1240 level. So SDFC Bank, ICICI Bank will be two names where we'll go for buy on decline for next leg of rally in the market.
So that's a view coming in on some of these banking names, but time now to put the spotlight on some of the railway and the capital good majors, and that's because my colleague is picking up that Railway Ministry is targeting to award the contract for covering around 36,000 kilometers of rail route network under the Kavach rail system in the next 5 years. My colleague Samir is joining us with the story. Samir, which are the likely beneficiaries in terms of the companies who can get these awards, and how big is the size of it?
Yes, definitely, because of the recent rail mishap that now Railways is planning to accelerate the implementation of the Kavach railway safety system, and for the same, Railways is now looking to engage more private players for rolling out the Kavach system. And in the same direction, 6 very prominent, very strong players, they have shown keen interest, which include the names like BHEL, Bharat Heavy Electricals Limited, Siemens, Keynes. These are a couple of names which have shown a keen interest for the Kavach railway system, and they are likely to be engaged by Railways very soon. So Railway plans to award the tender for Kavach this year around 3,000 kilometers, next year another 3,200 kilometers, and going forward Railway intends to roll out the Kavach system to around 36,000 to 40,000 kilometers of rail route network in the next 4 to 5 years. And for the same, they are looking to engage with more private players. So BHEL is one important player, Keynes, Siemens, Lotus is another name. So these are a couple of important names which have shown interest. And if you see the rolling out of Kavach safety system, it costs somewhere around rupees 50 lakh per kilometer. So the quantum of this tender could be somewhere around like 5 to 10,000 crore. But yes, this is a very important project of Railways, and they are looking to accelerate it, to implement it across the rail route network, and in phase-wise manner they will be issuing the tender.
Right, okay, we leave it at that. That's some interesting info that my colleague is just picking up. But Mayuresh, you know, just on the point of Railways and whether the meat of the rally is behind us, or would you say this is a long-term story, continue to add on declines?
Pullbacks would be a better way, yes. And there is a structural element behind this, Aisha. So if you're probably looking at the kind of orders that can come through from the Kavach system, from new lines that are expected to get introduced, railway infrastructure expected to get modernized, signaling systems. And therefore, I think the whole lot is expected to move in tandem with a lot of orders moving in for the sector as a whole. Wagon makers, as an example, with more metro coaches expected to come through. So I think the entire ecosystem will see accelerated investments and a government push through as far as the capex needs are concerned. And structurally, I think more orders coming with very reasonable margins will mean that operating leverage will play out for a whole host of these players. So railways as a theme, defense as a theme, your shipbuilders as a theme will continue. Execution is going to be extremely important out here. For railways in particular, again, I think Texmaco rail on declines is something that investors can probably look at. Run up a little bit too much for comfort, but any pullbacks on this stock can definitely be considered to be put on your watch list as well. Again, I think HBL Power, with Kavach system getting introduced, one of the leading players as well as the private space is concerned, it has seen a huge price action over the last few quarters. But I think numbers have also justified to a large extent. Valuations are through the roof at this juncture, and therefore any significant pullback on a stock like this, with the assumptions of what the railway transformation is expected to be, can be something on the investors' radars.
Okay, so some of the railway stocks still look good, and of course the budget focus is also likely to be around that. But shifting focus to the kind of outcome that we have seen from the SEBI meeting yesterday, and there was some further freezing of the F&O norms and criteria as well. My colleague Ansh has worked around to get the details as to what those norms are and what could it mean for the possible inclusion and exclusions for the Nifty 50. Let me take it across to Ansh to get those details. Hi Ansh.
Right, so this announcement happened last evening, but the official circular will be released soon. So Nuvama has come up with a note on this. Let's discuss three key areas. And the first would be timeline for new inclusions. A new stock inclusion can occur a few weeks after the actual circular comes in, and around 65 stocks meet this revised criteria as per Nuvama, but one must wait for the actual list. As per them, few potential additions could be Zomato, Yes Bank, Jio Financial, NHPC and Adani Green and much more. Now, if you talk about other exclusion timelines, then stock that do not meet the criteria will be removed 3 months after the circular is issued. And as per Nuvama, there are 25 stocks eligible for removal. And these stocks could be Balrampur Chini, Canfin Homes, GNFC, Granules, Metropolis and many more. Third and most important point is the method revision. So first here is median quarter sigma order size. Now the requirement has been increased from 25 lakh to 75 lakh. And this will ensure better liquidity and volatility in the market. Second is market-wide position limit, which has been increased from 500 crore to 1,500 crore. This will ensure that less stocks get into ban list and less frequently. Third is average daily value, which is set at 30 crore, which is up from 10 crore. This will ensure better liquidity and volume in F&O stocks. Now, fourth is performance-based stock exit framework, which is PSF. Though the clarity is not out yet, but more clear information will be out once SEBI issues circular on this.
Right, okay, new F&O eligibility norms, and it seems like many new names as well are being thrown up for those additions. In the meantime then, let's just take a status check on where the market is settling in at, because the last hour turned out to be a little bit of a choppy ride, but that's okay. You know, we're stepping into the weekend, closing in for the week, mildly soft, so we were unable to hold on, unfortunately, to that 2400 mark, which we started off above in today's trading session, and that was really being marked as one of the key levels. But Naresh, what's the sanctity of now 2400 getting breached, although not by a humongous margin, but still nonetheless a slip?
So nothing much. It's just a round figure, not a major resistance as such. The trend is positive. We could take a pause till the time we hold now 23,500. That becomes a new base, 52,000 on the bank nifty. The bias remains positive. It could be a slow and steady move. We are not really overbought on any of the parameters as such. So looking at it as a case of you've had 3 good sessions, a little bit of a pause going forward, but the trend is still positive, expecting further upsides.
The latest coming in as far as Nifty is concerned, 24,000 is something which is broken for now, but let's see what really happens. But as we are talking about some of the technical factors, let's take the BTSC trades as well from our chartist. Chandan, what's the buy today, sell tomorrow idea, if any?
So I'll go with selective IT name, and in IT I'll focus on 2 stocks. One is the OFSS, Oracle Finance, and second is the Persistent System. So I'll prefer to go with Oracle Finance. The stock has seen the open interest addition of around 10 to 12% during the day. Major trend is positive. A small follow-up can lead for the fresh breakout. Technically, it is all set for a pole and flag breakout. So recommending to buy with support of 9,700 and expecting a target towards 10,300 kind of level. So this will be the one name. And apart from that, I believe these companies, oil and gas companies or IGL, MGL could be in focus. So I can recommend the buy trade on IGL. Major trend is positive. It has given a breakout. So with support of 494, one can see an upside move towards 530. So Oracle Finance and IGL could be 2 preferred trade for my side on BTST.
What about your BTST ideas?
So first would be a buy on MGL. The stock has given a breakout into new all-time highs. Expecting a follow-up move going forward. Stop loss at 1580, target price of 1650. Second is a buy on Sun Pharma, trying to cross that 1525-30 resistance. Stop loss at 1510, target price of 1560.
Wanted to highlight one important news while I was talking about price hikes on telecom, tire, etc. There's some respite for people in Mumbai and Thane, and that's because the diesel prices and the tax on that has been kind of cut down a bit. It's reduced from 24% to 21%. I'm talking about the tax on diesel in the municipal areas of Mumbai, Thane and Navi Mumbai. The tax on petrol in similar areas has also been reduced from 26% to 25%. So there's definitely going to be some respite as far as the MMR region is concerned in terms of the prices of these petroleum products. And I think for quite a few people who are our viewers right here, this is an important news flow that you would want to track. But the other important news flow that you would want to track will happen over the weekend. Of course, it's the finals of the World Cup T20, which is right now underway in North America. Let me take it across to my colleague Karishma to get a sense as to what's exactly the equation like. Because yesterday, of course, India managed to beat England by 68 runs. So that was something that we were waiting by for, because the match started late. There was that rain worries also happening in. But in the meantime, let me take it across to Mayuresh. Mayuresh, you are a big follower of cricket, right? Have you been following this entire World Cup? What's the expectation come Friday? Will we come back on Monday with those India t-shirts happy?
No, Anisha, absolutely yes. I'm always an optimist, and the way the Indian team is playing at this juncture, obviously there are some complaints in the middle order as far as Shivam Dube's form is concerned and what Kohli is probably doing at the top. But I think both of them will probably contribute significantly in the finals as well. And again, I think we don't have an ICC trophy for the 11 years. So I think it's high time that we bring a trophy back home. So I think I'm very confident the Indian boys will do it this time around.
Okay, so we'll wait by for that. Sunday evening is something to watch out for. But separately, what else is happening in the market? Okay, tomorrow evening, not Sunday. I stand corrected for that. So Saturday is the time, and you can perhaps take it time to take it slower Sunday, get up late and get into the crew, and not that you have to come to office on Monday morning. So that's something to watch out for. But other than that, in terms of the market mood, it's been a decent week, to be honest. Not much to complain. We have seen good amount of rally on the frontline index. Bank Nifty by the end of it is a bit wobbly. Mayuresh, what's the take as far as some of these NBFCs is concerned? Because there are these, dark clouds emerging with respect to, let's say, some loan waiver issues, some MFI issues that Ujjivan flagged out, plus certain, stress and the credit cost issues. What do you do with the NBFC names right now?
Anisha, so our take is that where the exposure of NBFCs is, specifically in terms of unsecured personal agri loans, you'll probably just have to differentiate that a tad bit because there will be some provisions in terms of state waivers coming through on their balance sheets as well. But considering all factors at play, our take is that Shriram Finance is still something that can do well. The kind of exposure that the company has in terms of personal loans, unsecured loans is very, very minuscule, around 3.5–4%. Very strong parentage, expectations of credit ratings remaining strong, capital adequacy remaining strong, and a very stable advances mix will probably hold this stock in good stead. So any pullback on this stock can be viewed as a good buying opportunity. And then I think banks selectively, I think you have to be a little bit more selective as far as banks are concerned. A large part of price action has happened as far as most large private sector banks are concerned. But our take is a mix of private and public both. So ICICI Bank on pullbacks is something that we continue holding in our global portfolios. State Bank of India from the larger names as far as the PSU names are concerned. And within the smaller names, Karur Vysya Bank is something that we continue liking at Markets with India, and Bank of Maharashtra as well. So a diverse mix in terms of private and public, and Shriram Finance on the NBFC space of pullbacks is something that investors can look at.
Okay, that's a bunch of banks and, of course, Shriram Finance as well. Naresh, just very quickly before we wind up for the week, both a strategy for Nifty as well as Nifty Bank, looking at how the week and, of course, today has panned out.
So it would be a long on Bank Nifty at current levels, keep a stop loss below 52,200 and expect a recovery back towards 53,000 as such. So that's the view. On the Nifty, would wait for a little more dip for the risk reward to be better. But on the Bank Nifty, after today's dip, there is a risk reward to go long here.
Right, okay, that's the take coming in on both the Nifty as well as the Nifty Bank. In the meantime, Chandan, what's looking like a weak link right now? Any sector that you would say is a complete avoid?
So I can't say like that, but I believe selective sector could see some profit booking decline from higher levels because market has been consolidating. So I can look at name like Havells, Voltas, as monsoon is now there around the corner. So these stocks could see some sentiment sell-off. So Havells and Voltas could be two names. So looking at the price structure, most of these stocks are making multiple tops. So Havells one can sell with resistance at 1845. It can drip down towards 1750. Voltas may be other name. So I think these two name or this sector can underperform in the market in next week.
We let you go. Thank you so much for joining us today and have a nice weekend.
If you like this video, then like, share and subscribe to ET Now.